Your question again, like how do I keep it consistent?
Yeah. So basically, the question that I asked was, um, from a podcasting standpoint, like we're in real estate, so everyone, right? They want to do a podcast, they want to do something that's social, they want to do something that goes out there. The problem is that what I see is that there's not a lot of people that actually are consistent with doing it. They may start it, and then they realize there's nuances, like something as basic as what we were just talking about, like the equipment, right?
Right.
What's your microphone setup, your amplifier setup, your headphone setup, and how much is that going to cost, because there's a cost to do it. What software are you going to use to do it, the editing, the time, that all there's an opportunity cost that exists, right? So my question was, how do you stay consistent with doing that, getting past those, those roadblocks, because every single one of those things is a roadblock, especially to stay consistent.
You're totally right, man. I just keep going, man. I really, there is no like a scientific answer or anything special. You just have to not give up. That's what I can say about that, because every time that there is a challenge is a new hurdle that you have to pass,
Absolutely.
and I just see it as something that I have to pass by, I have to accomplish, and then keep going no matter what. And then in
That's
the
it.
meantime, I'm learning. So, for example, with equipment, I had to try to keep it as simple as possible, even though sometimes myself I complicate things a lot, So I
You
tried to
tend to
keep it
do
as
that.
simple as possible because, I actually, when I started doing the podcast, I was using my cell phone.
Yeah,
And the first thought that you get is, okay, I'm going to do a podcast. I need
exactly.
equipment. I need a super powerful microphone. I need amazing equipment, but I don't know anything about that, but I'm going to spend $1,000. And, all those thoughts, I bet they run in a lot of people's mind. And I have
Absolutely.
those thoughts too, but I have to battle those thoughts and be like, no, I don't really need all that. I
You
have
don't.
an amazing computer, which is my cell phone. If you have an iPhone, bro, there's a lot of things that you can do, and you know that, you
Yeah,
know.
absolutely. Absolutely.
So I started my podcast doing just voice with an app called Anchor. You heard
Yes.
about it?
Yeah, that's actually how I did my
Yeah.
my podcast.
Yes, I started talking about any subject. I started talking about what was going on that specific day, and that's it. And then that's how I launched my first podcast episodes. And then I said, well, what do I do now? I need to figure out a way to get more people involved. So I started connecting with people like yourself,
Exactly. Yep.
sending messages on Instagram like, hey, let's do a podcast. And I've been surprised myself by getting more yes than no's.
Yeah.
I don't get any no's. I get yes, and then some people don't follow up. Others they do follow up,
Yeah.
but it's a good feedback, man. Really good
No, it
feedback.
is. It is. It is. And when you reached out, and for anyone that's watching right now, Jose had reached out to me earlier this week. I think it was. It was just this week, right? And
Yeah.
or last week. And he just naturally just asked me, would you want to jump on the podcast? And the cool thing is like and I know this because I've interviewed some people. Some people want to talk about something very specific. I think we were very open about what we were able to talk about and what wanted to talk about.
Right.
And I think that's the hardest thing for people in when they start thinking about what content they're going to create and who they're going to ask and what they're going to ask is, they think that there's a formula that they have to follow in order for it to be something that's going to resonate with the audience. And there really isn't. I mean, you just simply reached out, said, hey, would you be willing to jump on a podcast with me? And I was like, yeah, let's do it. But I do have to say that the consistency of what you're doing, and the fact that when I did scroll through your feed and I did see that you were consistent with it, it helped, right? It helped. So I
Thank you.
do think that there's that initial roadblock of fear for some people who, when they go into it, they're like, man, I don't have any content. No, if someone goes to my feed or they go to my page, how's it gonna resonate? And the value
Yeah.
proposition for me was real simple, because I saw, hey, you've already done this, right? I didn't need, it wasn't even a question of it, right? And I think for people who jump into it, whether it's in our market, Florida, or it's in a different market entirely, I think the biggest pivot point is value, right? You got to, if you don't have anything strategic that you can fall back on, right? And you do, because your resume is your feed, then what ends up happening is you have to say or create some sort of value. Why am I going to exchange my time, and vice versa? for this. And I think you know, looking at your feed, I was like, yeah, it makes absolute sense because there's value there. It's a tremendous amount of
Nice.
value. So
Well,
kudos to you, man.
thank you, man. I appreciate it.
Absolutely, absolutely.
Thank you. Yeah, I had several people asking me like, yeah, what's the target audience? They will get like very those type of questions, like technical
Yeah.
questions. I really didn't have an answer for that. I mean, I do know who the target audience is, but I didn't have numbers. I'm not really following numbers right now or
Yeah.
anything like that. And whenever I started doing this, because a lot of people, they care about how many followers they have and how many likes they get and all that.
Yeah.
I'm not really paying attention to that. And
you shouldn't.
No, exactly.
I think you shouldn't. I agree with you 100%.
And at the beginning, I didn't have as many videos posted like right now or that many episodes. And I was like, well, I'm just going to do solos until people, whenever they see that I'm out there, then more people is going to say yes. And that's been the feedback, man. A lot of people are saying yes.
Yeah. And I think the people, because I've seen the streams that you've had. I think the people who've said yes, they offer a ton of value. You also offer the value as well, because people get wrapped up in like the followers and the likes and all that stuff, but it's really the content creation, right? The consistency that's behind it. Because
yes,
if you don't have an audience and if you don't provide anybody for something to see or something that's of value, then your audience essentially is not ever going to grow, and there's really no value add for that audience that you already have. So I would much rather have, 1,000 followers who like follow me religiously than have all these followers. And I do have, a lot of followers, and a lot of them don't engage, and that's just what it is. But at the end of the day, the people that do engage, I think that's the most important thing. So when someone starts asking like, what's your target audience? It's like, dude, everybody is the target audience. It's like anybody and anybody, as long as we get eyes on the content and we talk about something that's relevant. We're talking about a podcast. Obviously, you and I are in a real estate sphere, but who's not to say that somebody who owns a construction company and owns a concrete company wants to know about starting their own podcast because they feel like they have 15 different subjects of matter that matter to somebody, and they start doing it, right?
Man, and there is so much opportunity in that field.
There's a ton, and it's like I've gotten people who will like direct message me, or they'll just reach out to me directly because I have my phone number and email out there, and they'll just say, hey, it's just not a real estate related question. I saw you doing XYZ, and I just wanted to pick your brain for a little bit on how you started to do that and why you started to do that and how you pivoted that into business. And I think it's huge. We're in a time, man, like that is just it's a special time to be an entrepreneur. It's a special time to be a business owner. It's a special time to be on your own and kind of operate and feel, be free and kind of building your brand. And a podcast is one of those ancillary things that you can do. And I think that's huge when it comes to our space. And I think it's huge when it comes to just being a business owner in general. It's just one of those really cool things that you could just literally, for a couple $100, you just start televising what you have, and I've been on a few TV shows where they're on national networks, right?
Okay.
And it cost thousands of dollars. Aside from the back end stuff, which is pitching the idea, getting the idea to get to, through to the executives and things like that, then you have the requisite of creating revenue, right? So it's not even, so you have the cost, and then there's the revenue that goes behind it just to be syndicated on a national television channel. Doesn't mean that you're going to be televised nationally. You could be televised regionally, you could be televised locally, but there's a cost to it. Whereas we create our own audience, and that audience is basically, our quote unquote viewers and followers,
right?
And that costs nothing.
Nothing. You're totally right. And there is no middleman.
No, there's
nobody has to approve your show.
That's it.
If the people like it, they like it. If they don't like it, they don't like it. That's it.
That's it.
That's amazing.
Yeah, man. So I know we went off on like this whole tangent, but it's awesome.
Bro, I love it. Actually, I was going to ask you if you were down to go live on Instagram. I can send you a request. Yeah.
Yeah. I am, absolutely.
And
Awesome.
then I'll send you the request, and then we can go ahead and talk about.
Awesome. Let me turn this down right now. Send request. Yeah, let me put this bad boy on too. So are we live on Facebook?
We are live on Facebook and we're live on Instagram right now.
Do you want to see if you can tag me on Facebook? Because I tried to find you on Facebook. You could probably find me as Will Caban. And
The thing is that I'm doing it through Be Live. Have you heard about Be Live?
yeah. It's
And
an awesome program.
honestly, I don't know how to do that yet.
No worries.
No, that's another thing that I need to learn.
No, don't worry about it, man. I think it's a little bit restrictive in what it was. I did it. I had that program a while ago, and it still is a phenomenal program. Let me see if I can find you real quick. All right, there we go.
There you go. Awesome.
That's so much nicer than the computer.
Yeah.
All right. Let me see.
Hello, everybody. Well, there is some
Hey.
people waving. Nice.
Hey guys, how you doing? So
Okay. So I'm gonna. So the people out there that know who I am, my name is Jose, and I have a podcast show that is called Hacking Real Estate and Entrepreneurship. And today I have the honor to have Will Caban with me.
Hey guys, how you doing? I'm actually honored to be on the show, so thank you so much for having me. So I really appreciate it, man. Thank you so much, Jose.
No, it's a pleasure, man. So we're gonna be talking about. Well, we were already talking about a bunch of other subjects in regarding to making a podcast and all that. And
Yep.
then also, I thought that we can talk about loans, specifically VA loans, because I know that's a focus or something that you're really good at. And yeah, so but let's start by getting an introduction about yourself.
Yeah, absolutely. So Jose, again, thank you. I'm really honored to be on the show. My name is Will Caban. If you see my social media, I'm Will Caban, the Mortgage Man. And basically, I've been in the mortgage business in Florida for the last 7 years. Originally, I'm from New York, and I've been banking since 2004-ish, if you want to date me. And the core of what I do now as a mortgage banker is focus on value add, right? Focus on where I feel there's kind of an underserved community. And VA loans and veterans in general just have been kind of a sweet spot for me. My father was a veteran. My uncle's a veteran. A lot of my family members are veterans. And what ends up happening for me, and what I started to see when I was early in my career in the Florida market, was there was this kind of like notion of listing agents, even buyers agents, where they were like, look, we don't, if we have a veteran buyer, there's on the totem pole, you have, your conventional buyer, you have FHA, and then you have VA. Like that's the order of acceptance, if you want to say that, right?
All right.
And I didn't understand that. So what I started to do was kind of peel back some of the reasons. So I started asking listing agents, why don't you want to do VA loans, and like, why won't you accept them, or why won't you seller accept them? And we always get the whole like, the seller doesn't want to accept it, but at the end of the day, the sellers, honestly, 9 out of 10 sellers don't know the difference between a VA loan, FHA loan, or conventional loan. It's our job
Right.
as keepers. So basically, what I started to do was started to research a lot about VA loans, and in the Florida market specifically, I started to realize that we have, as far as veterans are concerned, we have the second or third largest concentration of veterans in the entire United States, behind California and Texas.
In Florida.
In Florida, exactly. And I think we have, I honestly, I think we're the second. I think California has the most veterans, and then you have us, and then I think it's Texas. We're like, depending on the year, we're like neck and neck. So what ends up happening is veterans, first off, for the biggest rebuttal I used to get was, they're not putting any money down and they have no skin in the game. Like literally, that's the thing I would hear most.
From the seller, right?
I would hear that from the listing agents. Usually.
Or from the listing agents.
Yeah. And it's because I would, one of the things I would do is I call the listing agent after we would make an offer, introduce myself, and try to, and I still do this, try to, try to sell the client on why, we should win the deal, and get some perspective on some questions as to, or concerns as to, like whether, a listing agent has, is worried about or concerned about credit score or income or DTI or something like that, right? And what ends up happening is, especially for me, is I started to get the whole rebuttal of, well, if they're not putting any money down, how are they going to be able to buy this home? And if they're not putting any money down, how are they going to be able to afford this home? And I started to realize, man, like there's a big misconception about the way VA loans work. And the misconception was really that because the veterans weren't putting any money down, everyone was thinking that they have no assets, they're not qualified, there's no skin in the game, so to speak, right? And I use that phrase purposely because that's the phrase I hear all the time.
Most of the time.
So what ends up happening is I started to I'm a part of a really big loan officer community in Facebook, that it's like 300 top loan officers all across the country, and we kind of share ideas with each other. So one of the things that we did is we're part of a what we call mortgage military boot camp, and our whole purpose is to basically become instructors so that we can teach listing agents and buyers agents how we can myth bust on some of the areas of VA that are not necessarily true, and kind of help buyers agents pivot and position a VA buyer so that they can get their offer accepted, and then also position ourselves with listing agents so that they understand that some of the myths that are out there, which are very common myths, are not true. And we try to debunk them so that we can give a fighting shot for our veterans to have, to have the same equal, opportunities as far as offers and bids and things like that for their, for their contract. So that's basically where this all kind of stemmed from. And then for the last couple of years, that's kind of like where we went, gangbusters. And ironically, it's not the biggest part of my business, but it is the biggest part of my business that I focus on, because there's still a lot of misinterpretation. Actually, I'll give you a funny story. This morning, one of the groups that we're in Facebook, we had one of the loan officers. She's a veteran. Her husband's a veteran. They're going to buy a home, and all of a sudden in her market, there's this like pushback of why her offers are not getting accepted because they're VA. So she asked for an opinion on how she can get it accepted. So there was one guy, and this is crazy. There's one guy who was a loan officer in a different market who said, "Go conventional, problem solved." And it was like, so he got roasted. And because here is like a fellow loan officer who's completely going against what we're trying to teach, and we've been teaching for years. And it's just as simple as, okay, go conventional. Well, okay, yeah, you're going to put money down. You're going to have mortgage insurance. You're going to have most likely a higher interest rate, and you're just completely conforming to the idea that the VA buyer is not a better qualified buyer. So and this was this morning, man, like this is crazy, and I wish I could show you screenshots, but I can't. He deleted the comments, but this is what happens, right? This is what happens, and I know it's not everybody, so I don't, and we don't try to lump everybody into it, saying, oh, it's only listing agents. I mean, there's misconceptions with clients too. There's clients that come to me and they say, it's 100% down. I don't got to put any money into it. It's like, no, there's still closing costs. You still have to pay still fees. Well, we're not going to put any money in escrow. Well, no, because like if you don't put any money in escrow, you technically don't have an executed contract because there's nothing being exchanged.
Right.
So there's still that learning curve, and I think there's always going to be that learning curve, which is it's a value proposition for guys like me, who can kind of capitalize on that opportunity so that we can still continue to create big opportunities for veterans. So I know I went off on a huge tangent.
No, that's good, bro. That's good. Keep going.
No, I appreciate that. So that's basically like how we came about with regards to like getting into how I personally got into VA loans and became an advocate for VA loans. And that was within the last like 3 years where I said, I got to niche down. And, for anyone who doesn't understand the basis of niching down. It's not, in my opinion, it's not only just finding one specific area and saying, okay, this is what I'm going to niche down on. It's finding that one problem and that one problem that you really feel passionate about that you can solve, right? Because there's a ton of other areas that we can niche on. I could become a condo specialist. I could be a person who does renovation loans and learn about that. But I was very passionate about the VA side because I have relatives who are veterans. I see, and when I was trying to fight for veterans to get into homes, I saw that the misconception that was there was basically just because it was a misconception. And the stacks are like the facts are staggering when you really break it down. Like anyone who comes to me and says, oh, like a veteran has lower credit score than a conventional buyer FHA, it's like, no, that's not a fact. They actually have the highest median credit score. Income, they make lower income. No, it's not. The fact is they make higher median income than both combined. Why? Because in the military, in order for you to get higher pay grade, you have to go through education. You have to go to schooling. You have to get you got to go graduate for specialized skills. You know, like people don't understand. If you become an airplane mechanic, that's a very specialized skill. If you become a helicopter pilot, that's a very specialized skill. So, you know, and the military teaches you that, but you have to, in order to get to that graduated grade, you have to go out and you have to get educated. So, you know, there's those misconceptions right there. And, you know, assets, like, you know, across the board, veterans have more assets median wise than conventional buyers and FHA buyers. So, you know, we can slice it however and make it look good or bad, but the facts are the facts. And I think when I started to do the education classes and I started to teach people and I started to, you know, veterans like buyers agents, listing agents, and just sellers, that's kind of where I saw my business, my value proposition, sort of excel. And that's really what I wanted.
You're still teaching those classes?
Yeah, we still teach those classes. We do them from time to time. I haven't done one in probably the last couple months because I've been focusing more on, believe it or not, bonds, down payment assistance programs, and creating content for that, because that's also a market. I mean, I feel like the underserved market is the market that I tend to target. And again, there's a lot of misconceptions, and I even had my own misconceptions about down payment programs, down payment assistance, and bonds being very difficult to do, and you know, just not being easy. And it wasn't until I actually made a move to my company that I'm with now, where we have a couple people who actually just specialize in that, and I was like, man, that's amazing. So they kind of broke it down, and they were like, yeah, no, we're doing this business, and there's a lot of misconceptions in that business just that specific business segment. So I decided to like completely, you know, take a break for a little bit from that side, from the veteran side, on teaching classes, and start creating content for the bonds and all that stuff. So veterans,
are you posting all these online?
No, I haven't posted anything online for two reasons. First is because of for compliance.
Okay.
We have to send all that out, and the second reason is because I want to have it all nailed down. So strategically, when I do start to send that out, I kind of have, you know, because I do everything kind of methodically. So I'll start posting, you know, maybe some questions, some myths, and then kind of build up to the whole class. You know, okay, this many people didn't get this correct. I got this question about bonds. I got this question about, you know, and then when I build up to it, you know, it's like TV, right? When you watch TV, it's like the television show is a 30-minute television show, but it's really 21 minutes if you break down the commercials. So I'm the television show, and the you know, the extra 9 minutes of marketing is what I throw into the content, and then the build up is, you know, season finale, so to speak, is the class, right? So come attend the class because this is what we're going to learn. This is your value proposition. So we're building up in that. In June, I expect that we're going to start having those classes consistently. Every 2 Saturdays, we're just going to have them out. Yeah, so it's pretty cool, and I'm looking forward to that. So in that, I salt and pepper the VA loans, because there's also that component. You'd be surprised, man. Like, there's a lot of veterans who know that VA loans exist, but they don't use them. I think the statistic from last year that I had was 85 or 87% of veterans who are qualified to get the VA loan benefit do not use the VA loan benefit. And I mean, that's crazy when you think about it. Like, here you are.
You
Go
think it's
ahead.
because they don't know, or because the realtor is not really pushing that because of the fear that the seller is not going to accept that type of offer?
Yeah, I think it's a few different components. So I think it starts with when you're active duty, and especially when you've gone to combat, and you spent a number of years in service, you have to adjust to civilian life, and part of that adjustment is understanding your VA
Knowledge.
benefits. So there are classes and courses that some veterans they have available to them. Not everybody takes it, but they have available to them that teach about your civilian benefits, and it's just not VA benefits, your VA loans. It's your medical, it's your all these other things, and part of that component is VA loans. But from what I understand, most of the instructors just kind of gloss over it. Not all, and I want to lump everybody into that, but they just kind of gloss over it because it's a very detailed topic. If you can spend a whole day talking about VA loans, but the truth is it starts from that. So they start hearing, okay, I don't have to put anything down, and there's a miseducation in that by itself, where I have a veteran that comes out and immediately, without even having a job, they're like, okay, I want to go buy a home. And then the education process starts. It's okay. We have to,
Right.
we have to have some gainful employment. And when you have gainful employment, then we have to make sure that it's something that's related to what you were doing in the military. If it's really specialized, if it's not, then we have to wait a certain period of time before you actually go and have qualified income, right? So there's that education piece, and then there's the is 100% down, no money at all to purchase a home, and it's not. You do have associated closing costs, and you do have associated things that you have to pay for, and there's that education factor. And then that's just the client's end, right? And then let's say that you educate the client in that regard, and then now they're qualified, you do the pre-approval, and then they start working with the buyer's agent. Well, now you have to educate the buyer's agent on, okay, what we're going to do. It is 100% down, but we have to put something on the escrow line because for two
It's,
reasons.
yeah.
First, because it's in some states, it may not even be an enforceable contract if you don't put anything there. And second, if you're a seller or a listing agent and you see nothing in the escrow,
You don't pay attention to that.
yeah, in that regard, I agree. There's no skin in the game. So why would anyone want to psychologically? Why would anybody say, okay, I'm going to agree to, you know, go on and accept this contract, but there's nothing in escrow. There's nothing on the line. So there's that education factor. It's like, okay, you have to put something, right? And it's not just something. You got to put something in there that's substantial enough to make a seller and a listing agent motivated to consider that offer. So once we get past that, then it's talking to the listing agent and addressing any concerns that the listing agent has, which are usually the appraisal. The appraisals usually take forever. There's the misconception about the seller having to pay fees for the VA or paying all the closing costs, and that's just not true at all. There's the misconception. Go ahead.
They have to pay some closing costs, not all of them, right?
No, they don't. So the biggest misconception is that they have to pay closing costs in general, right? But they don't. They actually don't. So the only fee that a veteran in some states can't pay is a pest inspection fee, which is $100. Most cases, the lender, like I would either pay for it or just lump it into the cost, or just waive it completely. But the misconception is that the seller has to pay the closing costs, and they don't.
No.
They don't. So when we get past that dynamic, then it's like, okay, well the appraisal is going to take forever, and it's like, well, it's not necessarily, because we're one of 4 or 5 states in the entire U.S. where on the VA's website it says that an appraisal for VA loans has to be back within 5 days. And
Wow.
I mean, so when anyone like pushes me on that, I reference that website. Like I literally, you can just Google it and it comes up, and I reference it and I tell them, if we don't get it, because it's not guaranteed, but if we don't get it on the 5th day, I can literally call the VA Regional Loan Center, which is phenomenal, by the way. And I can tell them, hey, I'm just checking in on this appraisal. Is it in yet? They say, no, it's not. I'm going to call the appraiser right now. They call the appraiser while you're on the phone. They follow up with you and they say, hey, just spoke to the appraiser. The appraiser said he's going to get it back by, today or tomorrow. And, so like you have that, there's a big support system that most people don't understand, that VA Regional Loan Center, you can literally call you can call as a client, you can call as a lender, you can call as a realtor. And you call them up and you just ask them about the program. You can ask them questions about the guidelines. You can ask them specific things about a specific VA loan. And as long as it's within the boundaries of them disclosing it, they will disclose it and they'll help you. So they're very much focused on getting a veteran into a home. That's their sole focus, is getting a veteran into a home. And you don't have that. You have it with FHA, but they're honestly
Right.
they're not as friendly in their headquarters. And you have it with conventional, but it's not the same. It's just not the same. The reception is just not the same. So when we talk about that aspect of it, that's like kind of the education process of it when it comes to VA loans. So it's a little bit different because I don't find myself having to do that with conventional, and I don't have to find myself doing that with FHA or jumbo loans. But I always find myself having to do that with VA loans, which is ironic still.
Yeah, no, definitely there is a big lack of information from the realtors side, and then also the customers, the buyers. There is a lot of things that they repeat because they heard somebody said whatever, like the example that you put, like they don't have to put any money down.
Yeah.
But they don't really know, they don't understand the process until they come to you or they come to somebody that can really explain what is it that they have to do. But let me ask you, you mentioned that once they come to you and they tell you, hey, I want to apply for a loan, whatever, there are times when they come that they don't have a current job. So when does the clock start clicking with the job, for example, whenever they want to apply? Because they were in the military, and I'm assuming that they were getting paid. I don't know, because I don't really have much knowledge about that. They were getting paid, and then they come to be a regular person now. They have to get a job, but can you combine that income, or you have to go wait in a specific amount of time until they can get approved because of the job that they have?
Yeah, so that's a great question. So there's usually 3 different scenarios that exist. So the most obvious scenario is that they say that we're in a specialized skill, and not, for the record, not every single veteran has a specialized skill. Not every single veteran does. But what ends up happening is if they do have a specialized skill, say like the helicopter pilot, right? The helicopter pilot ends up leaving his duties, being active, and then goes and ends up starting, let's say, he ends his military tenure, and then he goes and he works for a company where it's contracted out, or he's getting job as a helicopter pilot. Because of that, because it's a specialized, it's a highly specialized skill, and it's in the same line of work that he was doing. There's a very good likelihood one of 2 scenarios can happen. If he gets a letter, an employment letter that states out, what his salary is going to be, what his current position is going to be, and a start date. And as long as that start date is within 60 to 90 days of him actually closing on that loan, his first mortgage payment, we can actually close on that without him even starting that job. Right.
Right.
Then the second scenario is that, he gets out, specialized skill, he goes in, he starts his job. Again, we can use that income immediately because it's in the same line of work. It's in the same field.
I see.
So the third component is you have someone who maybe didn't have a specialized skill, and they go into this line of work that is not necessarily specialized, right? Let's say it's sales, right? Because you could be a veteran, or you could be in the military, and you could be a recruiter, right? And recruiting is very much a heavily sales oriented job. So when you're in recruiting, and you go into sales, depending on how you're compensated, like you and I are not compensated the traditional way. Like we don't make a paycheck. We don't have any of that stuff. So we have to show inevitably some sort of income, some income history. So we might have to wait 6 to 12 months, and sometimes some cases, depending on how that income is being derived, we might have to wait 2 years. So in that scenario, it can definitely it can waver. But in the same respect, if you say we're coming from a recruiting job and you're going into a sales position with a company and it's W-2 and you have income, a base salary, we there's a good chance we can argue very very successfully that we're going to use your base income to qualify you for a mortgage, within you working there the first month. So it's really circumstantial. And the really cool thing about VA is that they're, I mean, they're the only lender or the only program that allows you to basically do a common sense underwrite. If we have a question about this, like say this scenario, because these things come up all the time, we can literally call the regional loan center and go beyond our underwriting and ask them for
if
their
that's okay.
consideration. Right. And if they come back and they say yes, this is something that we can consider, or this is something that we would totally be on board with. In most cases, that can supersede whatever decision is being made by the underwriting. Not every company is like that, and of course, any loan officer would have to check with their company to see if that's even an option. But in 99% of the cases, that works all day. So it's really, traditionally, if you want to say traditional, 2 years of employment. But if it's a specialized skill and they're going from one specialized skill to another, we try to make a case for that immediately. And then you have, I guess there's four different scenarios where you have someone who's, say, not a veteran, is still active duty. You can still get a mortgage as a VA loan as active duty, right? So
Mm,
when, let's say that and I just had this happen. So I had a client who was moving from Puerto Rico, right, in June, but his wife was starting a job in May, right? So she had to relocate here, and he was still going to have his duties and his commands in Puerto Rico until the end of June. So let's call it July. So what we ended up doing was we ended up using his salary because we knew we had to go to his commanding officer because we knew that he was going to move, but it wasn't going to happen for a couple months. His commanding officer wrote a letter that said, yes, he is going to be moving. We got an offer. We got the offer letter for his wife, and we were able to basically purchase that property under the VA loan, which is the primary residence loan. And his wife was here. She's been here now for a month, and he's going to be coming here in a month from now and moving into the property. So there's a lot of leniency in terms of, as long as it makes sense and on paper you can put it together. Um, I haven't, to this day, still, I haven't met a different loan that can underwrite with the same level of common sense that VA loans do, which is another
nice.
reason why I like them. So, absolutely.
What about the credit scores? Do they have a minimum, or how
Yeah.
does it work?
So, VA loans don't technically have a minimum.
Okay.
The lenders usually impose a minimum, and that's where, like, I got to say, the industry stop gap is usually 580, right? I've seen lenders go down to 550. I've seen lenders go down to 500.
Wow.
Yeah, and so it really it's specific to the lender,
Does
but
it affect the interest rate?
it does
It
it
does.
affects the interest rate quite substantially. So what ends up happening is, in that case, is if you can go like in the 550 or 580 or 500 credit score, you're definitely going to be your rate's going to be higher for sure. There's probably most likely going to be a manual underwrite, which means that that gets enhanced underwriting, so there's a little bit more due diligence that's done. But the option is there, right? So you can definitely, if you're below 580 or if you're at the 580 mark or you're within that realm, there's still leniency in underwriting versus other loan programs, which is pretty cool.
And what about when you have a married couple and they want to apply together? Is they,
Yeah.
they could still qualify for a VA loan?
Yeah, so they could. So I'll give you two scenarios. So VA is it's very like black and white when it comes to the way that they underwrite. So you have your VA loans, which are like you have your married couple, right? That works even if the spouse is not a veteran, they still both get the VA benefit at 100%, but they have to legally be married. So it can't be a situation where someone says, "Oh, you know, we're married," but it's because they've been together for 20 years. If they're not legally married, then then it's totally different. So in that case, they can get full VA benefits. Now, in a situation where it's a vet and a non-vet, and that's very, very open. So it could be, you know, a husband, or let's say in this case, it's a boyfriend and a girlfriend, and the girlfriend is not a vet. In the case of like a father and a daughter, a mother and a son, a sister and a brother, if the situation is where they are not, it's a vet non-vet, meaning that the second person is not a veteran, then the whole ball game changes. So the veteran's going to get their 0% down, but they're basically going to have entitlement for half of the mortgage.
Oh,
And then the other person's going to have to come up with some sort of down payment. And typically that down payment is going to be about 12.5%. So in that situation, because the down payment is so significant, right? You're going from 0 to now 12.5%. In most cases, you might want to entertain doing, say, a conventional loan, or you might want to entertain doing an FHA loan. But if you have the 12.5% to put down, and there are families that do, it still could make a lot of sense because across the board, VA loans have lower interest rates, and there's no mortgage insurance. So even at
right.
12.5%, you would still have the benefit of not having any mortgage insurance. So we always look at it from a circumstantial standpoint. If you don't have the assets, you don't have 12.5% to put down, then we basically discount it and say, okay, let's look at some other alternatives, and then we kind of go from there. So it's really dynamic in that regard, because of the fact that, you know, if you're a vet non-vet, the first thing that we're gonna do is we're gonna check to see if you have the assets to put down, and if you don't, then we're probably gonna have a conversation about a different type of loan, for no other reason outside of the fact that you don't have the assets to put down.
Right. And what about in the case that it's a married couple, but the husband unfortunately passed away and he was a veteran? Can the wife still apply for a VA loan?
Yeah, it's a great question. So in the only way that really could work is if he was killed in combat, or it was something that was service related. So let's say like he had or she had something, a disability that was that he had when he was in the service, and he passed away because of that. Then in those cases, the spouse can actually use the VA benefit. But if it's something where it wasn't related, it wasn't, you know, they weren't killed in action, or they weren't killed while they were active duty, or they passed away while they were active duty, or they didn't pass away because of something that was service related or a service connected disability, then in that situation, you're the spouse unfortunately is not gonna be able to take the VA benefit.
I see. Yeah, those are pretty good questions, and a really good information for the people out there that they get to watch this video, and people that are in the military. You mentioned the insurance, the premium insurance, the VAs. Whenever you apply for a VA loan, that doesn't apply. You will not have to pay for premium insurance. Difference to the FHA loans, for example, that you do have to pay an insurance.
Yeah, you
on
do.
that.
Exactly. So the mortgage insurance, for anyone that doesn't know, for FHA you have what's called your mortgage insurance. Depending on how much you put down, that's basically mortgage insurance that you have for life. On conventional loans, if you put down less than 20%, then you're going to have what's called private mortgage insurance, which is PMI. The major distinction between mortgage insurance and PMI is that mortgage insurance is subsidized by the government because FHA is a government loan, and PMI is through private companies like Essent, Radian. You have, and there's like other companies, but basically the mortgage insurance is a private mortgage insurance company. So, and that's only relevant when you put less than 20% down. So in the case of a VA, if you don't put any funds down, you don't have mortgage insurance. And the reason for that, and most people ask me like, why is that? So obviously we know that you have to serve, and that's not just serve, but you have to serve a minimum amount of time. in order to be eligible for the benefits and the eligibility in order to any entitlement for VA loan benefits. And that's a whole topic that could go on for another hour. So just to keep it very short, once you get to that point where you actually are eligible, what ends up happening is the government is essentially subsidizing 25% up to a maximum loan amount in our state. In different states, they have different loan maxes. But in our state, it follows a conventional loan limit, which is $484,350. So they will basically, in essence, cover or guarantee up to that amount. And the reason why that's relevant is because some people think, okay, well, you can only do VA loans for that much. And I'm like, no, you can't. Like, you can do VA loans for $3 or $4 million properties.
Oh, really?
Yeah, you can. And the only difference is that you have to make up. You do have to put funds down for the difference between whatever the max loan limit is, which is 484, and whatever your purchase price is. So in this case, like a realistic example might be like a $600,000 purchase price, and the max loan limit is $484,350. Well, the difference between the 384, 351, and the $600,000 purchase price, you take that number, and then basically 25% of that difference, say 120,000. So 25% of that is what you would actually need to bring down. So it does allow you to go. I mean, there's really, in essence, there's no loan limit on the VA, which a lot of people don't know. So when you factor that in, it becomes even more of a beneficial loan because of that, just that one aspect right there.
So basically, you combine two loans in one.
No, it's just one loan. It's just one loan.
It's just one loan.
Yeah, the VA basically would cover would say we're not going to cover anything up, for like no money down. We're not going to cover anything above 350,000. Anything above that, you guys are now going to have to cover 25% of the difference. So if the difference is $100,000, then that means you're going to have to come up with $25,000 in order to make the shortfall. So then you would be able to finance the 75,000 on top of the 350, and it's all one loan.
All one loan. Nice.
Yeah. So it's beneficial, and I've used it a few times, especially up here in different markets, and it's a huge benefit because most people don't understand that.
But the top, you said the maximum amount you mentioned, it was 440,000 for a VA loan.
350. It follows it follows the conventional loan limit. So right now,
it's more than FHA, right? If I'm correct.
Yeah. FHA is, I think, 384, if I'm not mistaken. It always follows the conventional loan limit. They just need to post it. So like when there's a conventional loan limit change, it's not always gonna be the conforming loan limit until VA themselves publish that, yes, we are now following the conventional loan limits. So, but it's always going to follow conventional loan limits, and as far as I know, it's never followed FHA loan limits. So it's really good in that respect, because if you have the higher priced properties, especially the 484, 350s, or 500,000, you're in a very much competitive advantage because you still have zero down up to 44, and all you got to do is bring the difference between that small variance. So it's really huge in that regard.
Man, that's a big deal, man.
Yeah.
If it is 600,000, like you said, or 700,000, you're only putting, you said 20% of that, so 20% of 100,000 or 200,000.
Yeah, so it's 25% of
25%.
Exactly. So if it's $10,000 or $20,000 shortfall, then you're making, you're taking 25% of that. Now you have to bring it to the table, but they're going to still be able to finance the difference of what you're putting down. So it's
nice.
Cool. Yeah.
Very good information there. So real quick, because I know you said that was a different topic, right? So how many, what are the requirements for somebody that is a retired military, a veteran, to apply for these type of loans?
So basically you have to, what I always try to do is I try to ask them like how many years in service they've had, but beyond all of that, how many
years do they need?
It depends if they're active or if they were reserve. If you were reserve, I believe it's 4 years, if I'm not mistaken, and don't kill me on that one. If you're active duty, meaning that you've been deployed, right? In most cases, just sheer consequence of you being deployed because of the amount of time where you would say go somewhere else and be active duty and come back, you would qualify. But what we do, and I never really leave this up to the client. I always try to get the facts in front of me. There's two major documents that are extremely important when it comes to VA loans. So you have your what a form called DD-214, which is your discharge form, right? And that DD-214 is like gold. It's like a birth certificate for veterans. Every veteran that I've known has that certificate somewhere because it has so much important information. It's their personal information, has the years that they served. It has any like special designations that they've earned throughout their tenure with the military. So it's a very important document. We take that document and if they don't have what's called the certificate of eligibility, we'll order it through the VA, right? We can order it directly. And when we get it back, which sometimes it's just like instantaneous, sometimes it takes a little bit longer. When we get it back, there's a very important number on that certificate of eligibility, which is the amount of entitlement that they have as a veteran, and also if they've ever used a VA loan before, which is very important because I'll get into that a little bit.
Okay.
And if they're collecting any service-based disability. So, and I want to touch on that for a second because it's a very hot topic.
Yeah.
So when we're talking to people, just the clients in general, the main questions that I always ask is, have you ever served in the military? I know for some people it kind of throws them off because they're like, oh, no, I haven't. It's like, okay, no problem. And in some people, the conversation just leads into, have you ever served in the military? And it's like, yeah, I have. Okay, perfect. Were you discharged and did you get a DD-214? And by asking that one question, we change the trajectory of like where the loan was going to go. Like usually it's like an FHA loan conversation or it's a conventional loan conversation. And all of a sudden now it's like the potential to be a VA loan. Exactly. And then when I know that they're veterans, what I do is I ask them if there's any service-related disabilities that they incurred. Because you'd be very surprised, man. Like people think that disability is a physical ailment, right? But it's not. It's like if you're shooting guns for years and years and years and years and years consecutively, or just you're around loud objects for a very long time, there's a good possibility that you can lose, a portion of your hearing, and that could potentially be a service-related disability. If you're around dust all the time and it irritates you, or your respiratory, you could have respiratory issues. So like when we ask these questions, we ask them, and we never ask the extent of the disability outside of do you have any service-related disabilities? And if you do, what are you collecting monthly? Because some veterans get so used to having the disability, for so many years, and then collecting a check for so many years that they just tend to just forget that that's income that you can use. Yep. And in most cases, it's not taxable income, and it's in most cases for the life of the loan. So we end up in a position where now we have qualified income, and this certificate of eligibility, we also call it the COE. It has all of that information on there. It'll tell us how much they're collecting in disability benefits. It'll tell us the percentage of disability that they have, which is extremely important. And the reason why that's important is because in the state of Florida, as in most states, if you have any service-related disabilities, you can actually have some of your property taxes, or in the case of being 100% disabled, you can have basically all of your property taxes eliminated on your property. So it's really that from that conversation too, it's important to understand, because you now can educate a veteran on, okay, now you have these benefits, and now there's this additional benefit of why you want to go and be in the VA space versus not being in the VA space. So it's not just, it doesn't just tie down to 0% down, lower interest rate, no MI. Now it's like, look, you have a huge benefit because of the fact that you have the service-related disability. You now have a potential tax savings with your homestead, etc. So those two documents right there are like gold, because they tell us the full story. And then there's situations where vets unfortunately are not qualified because they think they are, and maybe they were discharged dishonorably, and we don't ask any questions. It doesn't say anything. It just says, they're discharged dishonorably. And they don't have the VA benefit. They served the amount of time, but they were just discharged dishonorably, and now they don't have
They don't
that benefit.
qualify.
Yeah. So usually I ask them, if they've served, if they have, do they have DD 214, and that's going to tell me a lot of what I need to know. And then when I need to order the certificate of eligibility, I order that to the VA, and that comes back, and then that's kind of like how we determine if they're VA approved and things like that. I know I touched on it really, really quick earlier, but in the case of veterans who've used their VA benefit, so one of the myths that we go over is that most people think that once you have a VA loan and you use it, regardless of whether you sell your property or you keep it and you move away because you have new PCS orders, that's it. Like, you just have no benefit. You can't use it ever again. But that's not true. That VA loan, that benefit is there for life. So there's two instances where you can use it. One where you own a property and one where you don't. And what ends up happening is you might find yourself in a position with the military where you move around a lot because you get the PCS orders, which is basically change orders from one station to a different station. So you might be in Arizona, and then you get change orders to be in Florida, Miami, right, Homestead. And what do you do, right? You own a home there, but what do you do? Like, you don't want to sell the home because you've invested a lot of money there, and you just want to keep it because that's where your family is, and it might be something that's beneficial to you later on. But you still have entitlement, right? You still have some entitlement left. In a situation like that, because you're moving so far away, you can actually use your VA benefit, whatever's available in your VA benefits, through what we call second tier entitlement, and actually purchase another property up to a certain amount. And anything beyond that, the principle of what I just told you about with the 25% down over that entitlement amount would exist. So there's that benefit too, so that when we're talking to veterans who are coming in from different states or coming in from different countries and they have the VA benefit, they're still going to be employed by the VA. That's a benefit that we look at as well, because they may have purchased a property in a different state years ago, still own it, it's still under the VA designation, so they don't have that VA entitlement, but they still have a portion of the VA entitlement still left. They can purchase the second home. And it's not really a second home; it's a primary residence, but they can purchase that home and still own the other home with the VA loan. So there's a lot of that misconception is also out there, that once you use it, you lose it, and it's like, no, you have it for life.
So just to make sure I understood correctly, and everybody else, people out there. So if it is 440,000, and then somebody purchases a VA purchases a home for 150 or 200,000 in a different state, then they come to Florida, they can use that portion that is left out of the 440,000.
So there's a calculation to do it. It's a little bit, it's not complicated, but you got to get the actual numbers from the COE.
Right.
But
yeah.
Just to kind of keep it simple, if let's say in Arizona, right, the houses are probably 150, 200,000. So let's say that they buy a house for 175,000. So realistically, they still have about 300,000 left in their that they can use in their entitlement. If they come to Florida, right, on change orders or PCS orders, they're just relocating in general, and they want to purchase a house, say for $275,000 or $300,000, as long as they have the certificate of the eligibility and the entitlement left, which they should, they would be able to purchase that property with basically no money down, using the VA benefit, using the VA loan benefit. So
go ahead.
No, what I was going to say is the most important factor is when we know that that's the situation, there's a very detailed calculation, because there's a minimum that you have to spend on a property, and there's also a maximum that you have to spend. So you can't just say, okay, now that I have 300,000, I'm going to go buy $100,000 house, because if the calculation says no, you cannot, because you've already used that much in your first tier entitlement,
right?
Then your second tier entitlement is going to have a minimum of what you have to purchase, and it's going to have a maximum of what you can purchase. So the calculation is extremely important. But just to kind of to keep the conversation very simple, the short answer is yes. If they buy a $200,000 house in Arizona and they want to buy a just for argument's sake, or $175,000 house in Arizona, and they want to buy, say, a $300,000 house here, it could be possible, assuming that they have the eligibility. So it's a really cool benefit.
And if they sell it, then I guess they can renew it again, right? They can.
Exactly. So you just do the reinstatement of your eligibility, and now you
Nice.
have full eligibility, which is really cool.
Wow, man, this program has a lot of benefits that have, I'm sure I didn't have any idea, and a lot of people don't have any idea about it again.
Yeah, no, it's a really cool program. And there's a lot of leniency. Like if you ever if a veteran unfortunately goes through foreclosure, there's certain instances where if what we call they burn their entitlement, which means that now because they foreclosed, they no longer have access to that entitlement, but there's still entitlement left. In some cases, they can still use that entitlement that's left over for the purchase of a VA loan. And
Wow.
then for short sales, as long as certain circumstances exist, and as of today, as far as the guidelines are concerned, if they short sell a property and they've been making payments on the property, like today's Friday, they can literally close on a property Monday, assuming that they've been making their payments. The reason for that is because, let's just say that I'm in the military, I'm still active duty, and I get change orders to go to a different state, but I don't want to keep my property because I don't have the physical, the warehouse to manage it as a rental property, and I don't want to keep it because it's going to be more of a burden to me and my family. I want to sell it and it's under market value. When is it in that situation? If you've been making your mortgage payments and you do short sell it, and then you go purchase another property, you can do that because the military lifestyle is very transient. You're moving very often. So it's understood in that situation where you can get the exception approved because of that. So, whereas like if we short sale, most times, even if we're making the payments, it's going to be a hard hit for a number of years.
Right.
So there's a lot of benefit to understanding those little nuances, because if you do, then you know how you can properly guide a veteran, especially considering if you know their entire full background and the scope of what their financial situation was and their payment and liability history was. So, it's just those little leniencies that really differentiate it from, say, FHA or conventional. So,
Wow.
yeah.
Let me tell you, Will, you cover this subject very, very, very well. For
I
real, you
appreciate
really
it.
know your stuff.
I appreciate it.
I had a ton of questions that I wanted to ask you, but you covered pretty much all of them. You really know your stuff, man. Thank you so much.
No, my pleasure.
I really appreciate, again, you joining me today to do this episode. I think we had a really good feedback on Instagram. We had a lot of people waving and a lot of people join.
Yeah.
So anyways, thank you so much, buddy. Appreciate it.
No, my pleasure. My pleasure. And look, if you guys ever have any questions, you can always feel free to reach out to me on Instagram. I'm Will Caban. You can just look me up or look at Will Caban, the Mortgage Man. I advocate for VA loans, veterans in general. And if you are out of state, right, because a lot of our audience is not just in state. If you're out of state, whether you're a realtor, whether you're a veteran, whether you're a loan officer, and you have questions that are related to VA loans, not going to say that I'm a guru. I'm not going to say that I know it all, because I don't, but I have a very good network of people that do. If I don't know the answer, I will tell you. If I can find the answer, I will tell you. And just utilize me as a resource. And I appreciate the platform. I appreciate you giving me a voice right now today. And it was awesome. And thank you for the invite on the show. I really appreciate it.
Of course, man. It's my pleasure. Thank you so much.
No,
and thank you, everybody, for joining today.
Thank you. Take care.
Man, that was pretty awesome.